BOPET as well as BOPP prices have moved very well, and on the back of that, the stock has been moving higher. To understand what's the outlook going ahead, we're joined by Mr. Rajesh Bhatia, the Group President and CFO. Well, thanks so much, Mr. Bhatia, for joining in. Let's attack that point first. What are the current spreads on BOPP as well as BOPET? If you could give us, a rough estimate, and how has it moved, say, in the span of the last 3 to around 6 months?
Okay, so if we see BOPP, as you said first, we're talking about Q3 versus Q4, that is March 19. We have seen a spread increase of about 19% in the BOPP category. It was around 38 rupees. It was in Q4, it was about 45 rupees, and it was currently around the same level or a little bit higher. The BOPET industry has also seen a similar kind of a price increase, margin increase over the last Q4 versus Q3. And there also, the industry has got about 19% higher margins as compared to the Q3. And currently also the BOPET market continues to be robust. Q1 in any case is a good season. Q1 and Q2 are good season for the packaging films because of the increased demand for the films as well as for the resin. So I think the prices continue to look good.
Spreads we didn't get. Yeah.
BOPET side, there is going to be capacity coming on stream from Jindal.
Okay.
I think in next 1 month or so, but the markets themselves are going up by about 10% every year. So I think that absorption is not much of an issue. And going forward towards the end of the fiscal, we will also see some capacity coming up from another player. But I think with those two things, we are not seeing any further capacity.
What is the current spread, sir?
What is the spread, sir? You said it was around 55 in the previous quarter. Where does it stand now? This is for BOPET.
So 55 when we see versus a normal film would have still about 50 to 52 range. But the value added and all that, it will be north of 55.
All right. So now that you're optimistic on the spread staying at these elevated levels, Mr. Bhatia, if you could give us some guidance for your margins, because FY19 as well as the fourth quarter, we did see not much improvement in the margins. In fact, just about a 20 basis points improvement in the fourth quarter and a 50 basis points decline in FY19. So margins around 13.5% possible for FY20?
I think yes, because we're not only in FY19-20, we're not only banking on in higher capacity utilization for our films business. So FY19 we did the highest ever production in our packaging films business, and it was up by about 7% over the FY18 numbers. And even if we look at if we can achieve the same increase over FY20, I think we'll be close to about 100% capacity utilization across all our facilities. So that augurs well, and we clearly seeing that will happen. India, per se, we don't have much of a leverage because, we not added capacity. So there our facilities are already fully utilized, so we can't increase any throughput over there. It's only that, our global markets, where the markets continue to be robust, so we will see, the volume growth coming over.
Mr. Bhatia, currently I think packaging films accounts for bulk of your revenues, right? More than 60%?
Yeah, you can.
And flexible packaging products, that's around 39%? Rough numbers. What I'm trying to get at is, will the mix start changing and moving more towards flexible packaging products? Because then that's what will help your margins, isn't it?
No, so that is the whole idea. So that's what we've been saying, that in the packaging films, we close to 100% capacity utilization, while in packaging, flexible packaging, our capacity utilization is still less. We have a capacity of about 135,000 tons. We currently producing about 80,000 tons a year, so we have the capacity there to do. Plus, when we take our aseptic packaging also into the account, so these two alone should give us a higher growth this year. Last year, the growth was a bit subdued for us in these categories because, we had a 3% volume growth in these categories. And that was intentional because, some of the low value accounts, we exited, and that was intentional. So there we had, sort of not such a good year. And packaging continues to be a bit, competitive as of now. There's a consolidation happening, but that's
right, Mr. Bhatia. You said that additional revenue will come in from your aseptic business as well. So just give us some numbers. How much did you do in FY19? And what is your target for FY20? What sort of customers, at what stage are you in discussions with new customers?
So, if I give you an idea, for a juice category, currently we have about 39 customers. In the dairy category, we have 4 customers, and the liquor category, we have 12 customers.
FY19 revenue was how much?
I don't have immediately.
FY20, what is the target?
FY20, we're looking at about 1.5 to 2 billion packs a year.
So
currently, we're doing about between 95 to 100 million packs a month. So that's what we are targeting.
In terms of revenue, what would that mean?
So in terms of revenue, 2 billion packs would mean about 350 crores of a top line.
Okay.
And Q4 FY19, we were already a bit positive in the aseptic packaging business, marginally though. But adding volumes to that would give a better margin.
All right, Mr. Bhatia, thanks a lot for stopping by and giving us all those details. The street will definitely hold you on to that 350 crore packaging, aseptic packaging guidance that you've given. With that, we are out of time on this edition of Chartbusters.